All right, stocks have been, and really other asset classes have been in kind of inflation mode lately. Inflation, and that trade's been unwinding a little bit, and we've been reverting back to a large cap tech trade here lately, with some breakouts today, specifically in that area. So I'm going to take a look at that to see what it looks like, what other indicators kind of support a bullish breakout. What that means in terms of the current run we're on. What are the chances that it can extend an already kind of record long run from an intermediate basis even longer without an exhale, especially on the S&P 500. Why are the Qs looking so much more bullish right now than, say, like the Dow Jones and the Russell 2000 in terms of what's driving it more than driving these other areas to similar breakouts, whereas they're not getting those similar breakouts. So we're going to talk about those discrepancies, and also we're going to talk about our trade idea of the day. That's for how to trade a stock that's in a previously strong sector that is turning itself around, that is now starting to give back itself and start a little bit of an exhale itself. So let's go ahead and get started. Today is Monday, June the 14th, 2021. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, well, let's go ahead and start off taking a look at the S&P 500 with the market forecast indicator. As you can see, we have a strong bullish posture still. Third day in a row to the upside, closing for the second day in a row at the high of the day. So very, very big move at the end of the day to the upside. Brought the near-term line all the way up to what would be the 95th percentile. Momentum line, not really going too high because of the long lower shadow there. So just something to keep an eye on, but nothing major, right? As long as it's not extremely oversold right now, we don't really care what the momentum line does. The near-term line has had a nice little rally. So here, we had the near-term pullback that started here. That's the low point. We've been on this near-term run since, up to new highs, continuing to get new highs. So a continuation of this bullish run that we've been on for so long. Now going into its eighth month, which is really, we've seen a couple of times in the last 20 years where it's been 7 months. So now we're going into 8 months. It's a very, very long rally without, the exhale that we have seen in others, right? We have seen it in the NASDAQ, and you can kind of see that now. Again, very strong near-term line, and look at the breakout up to new highs here. So that's a very significant move on the NASDAQ there. Dark green shading the green line, obviously well up above that moving average. In fact, if you take a look at how far above the moving average we are right now on the NASDAQ 100 to the simple moving average here, you can see we're about, 4% off of that moving average there. So we're not as high as what we've been, but you can see how we're really gaining some momentum there. And then finally on the Russell 2000, we're not really able to punch through and get a new high there. So on the NASDAQ we have, and it's been a while for the NASDAQ, but on the NASDAQ we've got a new high. On the S&P 500 we got a new high. But the Dow Jones is still kind of flat. That long upper shadow still persisting with actually a bearish posture. We got some light pink shading. It's the only one with light pink shading. Breakout on the NASDAQ, and then still kind of sideways action on the Russell 2000. So still, all of them. If you look at the Russell, we got the strong bullish posture there with the rising market sentiment line. The NASDAQ now has got strong bullish posture with a rising market sentiment line. It's a lot higher. And of course, the S&P has got the strong bullish posture with the market sentiment line in the upper reversal zone. So needless to say, you got dark green shading across the board, all except for one area, right? That's the only one that we don't, where the intermediate line is still below market sentiment. Market sentiment's falling. It's still above 60, even though it's dropping. It's still above 60, so it's still in bearish or bullish territory. But it had the worst short-term sentiment here on the Dow that we've seen across all these different indexes, right? The S&P, you notice it didn't drop very far. The momentum line didn't even get oversold. The near-term line stayed in the upper half. You look at the NASDAQ, the momentum line again didn't get oversold. The near-term line stayed in the upper half. You look at the Russell 2000, the momentum line was oversold. The near-term line was into the lower half, but that's a bullish posture. That's a bullish pattern. and that's played out with a bullish move on Friday and then going into today's move. So all the rest of these have been haven't had nearly as strong a short-term sentiment as what we saw on the Dow. That's a pretty bearish short-term sentiment on the Dow, and we're seeing a lot of industrials really kind of struggle with some weakness, whether it's Deere, lately Caterpillar. I mean, those are industrials. They're not necessarily Dow Jones industrials, but they are industrials. So you can kind of see like that type of stock has been struggling a little bit here, more so than the broader markets have been. You'll see some more of that when we get to the sector charts here in just a minute. All right, before we look at some other charts, I invite you to subscribe to our YouTube channel. Click mouse over this icon here in the bottom right corner of your screen. Hit the red subscribe button that pops out. There's also one down below the video if you're watching us on YouTube. Hit that red button, the bell next to it. That notifies you when our videos are posted. Also, while you're down there, hit that thumbs up icon. That tells us two things. Number one, you liked our video today. And number two, that you want us to do another video again tomorrow. It's a quick way to give us feedback if you like our videos. Of course, if you don't like our videos, you don't have to click on anything. You don't even have to watch. But if you do like our videos and you want to let us know, you can do that right now while you're watching. Also comment down there. What did you get out of our videos today? As you're watching and something stands out to you, comment on it, post on it. If you have any questions, post those down below. Reply to other people's questions down there, and let's keep this conversation going. Join our website at marketscholars.com. There's a link popping out there in the top right corner of your screen. Click on that link to subscribe to our site for free. Follow me on Twitter for more content in between the videos. There's my handle right there, at DavidSettle42. Join our Market Outlook Facebook group that we've created. All right, if you're watching us on our blog, come over here, click on this icon right there on the right. That's our Market Outlook live video. Again, every day I do the Market Outlook videos. I do this live video at 3:30 Eastern time on YouTube. This is where you can get to it by clicking on this image. You can also get to it up here by clicking on Market Outlook Live Trade Review. It is just what it says it is, right? We go and we look at all the trades we've done in these videos, and we continue to review old trades to see whether we should stay in them, get out of them, or whatever. We also put on today's trade before the market closes. So the trade that you're going to hear about at the end of the video, we've already put on today before the market closed. That's where we did it. So you can get access to it there. All of our upcoming events as well. Again, all of our paid subscribers get access to those. Of course, our premium subscribers get access to it for cheaper. Also, in addition to that, our premium subscribers get access to all of our premium tools and access to our class forums that our Plus subscribers don't get access to, as well as 2 Q&A sessions, group Q&A sessions there as well. So those are all some perks for being a premium subscriber. Come down here to the bottom, click on this heart, opens up a new tab. Click that like button right there. Click on this thumbs up icon, opens up another new tab. Again, click on that like button. The more you do that, the more engagements we have, the more people will see our content. Of course, that's how their algorithms work, so that's why we keep asking for it, and we appreciate those who do that. It also benefits you because Twitter and Facebook will promote content in your timelines from the accounts that you engage with the most, right? Not just the ones that you watch, but the ones you actually engage with. So we try to make it really easy for you to engage with us here with just a click or two. All right, let's get back to the charts. Let's take a look at the weekly chart for the S&P 500. Again, a little bit of a negative PPO. Again, still a very small body. We've talked about this as Heikin-Yashi differential, that basically the size of the body. We had dipped up to 40 points or back down to 35 points. Of course, the week's not over with. So we'll see if we continue to push higher, if the body gets bigger. But we've had some really, really small bodies here relative to really big bodies there. So that's a divergence. So we had a really good push higher. We're getting a really weak push higher to higher highs now relative to before. So it's a divergence that typically, obviously, will play itself out. We'll see how it plays out, but that's not necessarily the most bullish pattern there, unless we can really push up here over the next week or two. If you take a look at the 3 green arrow charts, we obviously still have the 3 green arrows. If you break it down with very low volume, but we'll talk about that in a second. If you take a look at the 2-line versions, we're still above the 8-day moving average. The MACD is still above its moving average. The gap's getting bigger according to the histogram, just barely though. Much smaller high than what we've seen before, so we're really grinding here. The stochastics is also grinding. As you can see, that average has really cropped up to really, really high levels. Of course, it's a zero. It's an oscillator that goes from 0 to 100, so it can't go up too much higher. The directional movement index is something we've really been paying close attention to. The negative indicator has now dropped below 20. That's a good sign. You can see when it drops below 20, it can stay below 20 for a while, as you can see on some of these. But it can also dip its toe under and pop back up. So, let's just kind of see if that ends up being the case here. Again, it'd be nice in conjunction with that to get the positive indicator above 30. That kind of signals a directional move. We're not quite there yet. The Qs are there. So the Qs are making a directional move with this breakout. I mean, getting above 30, getting below 20. The ADX is rising. That's a very strong positive move for the tech index, whereas but the IWM still quite not. So we're still flirting with 20. We're still below 30. So the Qs of all indexes are forming that breakout pattern. You can see that here too. When you look at the RSI and the CCI, those are very strong levels for both of these. And you got up there too over here, but those are very, very strong levels. For SPX, not quite as strong, but we are above 60 and we are above 100. And then you look at the Russell 2000 and we're diverging and we're still below 60. So we're not quite there on the Russell. We're not quite seeing the same breakouts on the Russell as we're seeing on others. The Q's also got a breakout above the upper band of this value area, as well as pushing up into the upper quartile of that band. So that's a good little breakout signal. SPY also kind of flirting with breaking up above this these old highs here, and also flirting with the upper quartile. But on the other hand, IWM still not, right? So we're still within resistance. We're still, still got that center of gravity exerting its pull and influence. And you also still, unable to quite get into that upper quartile and stay there. So you can kind of see that the Qs are trying, and the Qs have a good breakout signals, but we're not seeing that confirmed with the small cap index, which had been the bull, had been the leader. It's kind of given up those reins here, it appears, to the Qs. Remember, the NASDAQ is the one that has had the intermediate pullback. So the fact that it's kind of more bullish right now and kind of starting its own intermediate run makes a little sense from that perspective that, it's had the exhale that the others haven't. So it has the ability to go up a little bit more right now because it is coming up off an intermediate low, whereas the others are still maintaining this strong intermediate run, and the Russell is just still really, really sideways and very noisy. One more chart I was going to look at here is the trend strength indicators. See, SPY is just barely getting a new weak trend going, which is a good sign for it. IWM, it's kind of flirting with starting a new run up here, so it's not quite there, but it's really, really close. And then the Qs are also really close of getting above 65 and getting above 2. So, both of those two are a lot closer than what we're seeing right now on the S&P 500, which is not quite there. Still very, very weak trend. But the other two are looking very strong. Just right there, right on the cusp of getting above 2 and above 65, which is, kind of the beginnings of an intermediate trend, and ultimately hopefully moving towards 5 and 80, where it really cements that trend in there. If you look at the short-term moves, you can obviously see the new 4-week high, see that big push at the very, very end. You can kind of see again we're going to be really moving up to low fast, really fast. Eventually, that's going to become the low point within about a week and a half. So we'll see. We're kind of pushing up the high a little too slow. IWM, we're not pushing up the high anymore, and the low is going to be ramping up here pretty quick. And then the Qs, you can see, did get a new high. It has been pushing up the highs a little bit better than what we're seeing in other areas. You saw the volume in the trading range. The volume, 42 million shares trading. The trading range today, just 2.25 points. I mean, very, very small levels as we I mean, we're bringing this, the ATR is coming down to really extreme lows. The ATR itself is down to an extreme low. Volume is down to extreme low. Volatility is working its way back again after jumping up to start the day, but working its way back down to extreme lows. So we've got really, really extreme lows on a lot of these indicators. That again doesn't mean we have to go down. It just means that it limits how much we can actually go up. You see that here too, as the percentage of stocks that are above their 50-day moving average continue to drop. Even today, it dropped a little bit more as we're down to 61% now. So, you know, that we're getting back down to, you know, we're below the mean for the last year. Of course, if you go out 5 years, there's the drop. The mean is at 59. So we're almost back to the mean in terms of how many stocks are above the 50-day moving average, even though the index itself is moving higher. So big divergence there in terms of how bullish we are, and the breadth indicators telling us maybe we're not as bullish as we think we are. So again, to summarize the technical outlook, it's a strong bullish move. It continues, and it's kind of grinding, very small ranges, very small volumes, very extreme lows, very significant breadth divergences, and divergences showing up in other areas. The Q's kind of showing some breakout signals, and kind of leading the way higher. We're not seeing that same breakout signals across other indexes, and of course, in the very blue chip Dow Jones, we're not seeing bullish indicators at all. So, we're seeing some discrepancies across the different indexes despite the bullishness, and that shows up in mature markets when when everything's going down, it all goes down the same. Like, they all look exactly the same. But when we start to go up, when you've been going up for a while, when it starts to go up, everything goes up the same. But then as you've been going up for a while, it starts to diverge, right? We start to see discrepancies, and they don't all behave the same, and we're seeing that right now. It's just again another sign of a mature intermediate run that we're on, that we've been on for a long time, and until there's some kind of catalyst to break it, we just grind with small moves and small volumes, and we're just kind of pushing a little bit higher here, a little bit higher there, lots of opening gaps, but very small moves after that. This is kind of the market we're in, and some things are behaving, as you'll see here in a second. Some things are behaving well, others aren't behaving so well. That's again another sign of maturity in a run. It doesn't mean we have to fall, it just means it's mature, so we manage our risk accordingly, especially on an active basis, according to those signs of maturity, keeping in mind how again, kind of like the extreme run that we're on, and as I've said before, the longer you inhale, eventually the exhale will be commensurate to that, with that, to the same extent. So what do you think? Do you agree with that? Do you disagree? Let me know in the comment section below, especially if you disagree. What charts or indicators are you looking at that suggests either why you're a lot more bullish than I am or a lot more bearish than I am? Share those with us there in the comment section below. All right, now let's take a look at what's driving the price action today. And we've been talking about this inflationary trade with commodities up and gold up and real estate up and the dollar down and yields up. Well, lately bonds have been rising, and we saw that last week, kind of quasi risk off move, kind of permeating the bullishness from last week, with bonds finally taking off and some of those safety trades dropping. Well, now you notice, the inflation trades dropping. Now you notice commodities and bond both fell. The dollar was slightly up, but not very much, and they both dropped pretty hard. And small cap stocks also dropped relatively hard. Again, it's all relative, not very. I mean, it's relative to the small losses and gains we see in other areas, and then again bonds as well. You notice at the very end of the day, it was all equity driven. Real estate as well, rising at the end of the day, but it was EFA and emerging markets and the Qs rising up by far the most, finishing with 1%. I mean, it was all these gains occur pretty much at the very, very end of the day today. Let's break down some of these charts from some of these different indexes. Let's start off with the Euro US dollar, the one that kind of broke down on Friday. The dollar rising Back down below that, we got light pink shading with the intermediate line falling down below 60. Yellow line, we don't have a red line yet, but we have a yellow line. If you take a look at the two-line version for the Euro US dollar, you can see that it's the 8 and 17. We've been below the 17-day for a while, and the 8 and the 17, the 8's below the 17, the MACD's negative, and both of them are crossing the moving average. So we're kind of getting a little bit of a bearish signal on the euro, which means a bullish signal, of course, on the dollar. As you can see, we were so positive, but now the positive indicator has dropped below 20. All right, and the negative indicator is trying to work its way up. So we're not significantly bearish yet, but you can also see we're not bullish anymore either. When you look at it from a trending standpoint, Ichimoku cloud, you can see, we were bullish and now we're not, right? So now we've dropped to zero there on both of these. So now we're not bullish anymore. And you can kind of see on the opposite side of the equation, TLT is, now it's up above the cloud. It's been below the cloud or in the cloud for so long. Now it's above the cloud, and we are getting we have at least a weak bullish trend, trying to get to a moderately strong trend. So long-term bonds are still, even with a little bit of relative weakness today. This is basically giving us a bullish intermediate confirmation signal with an oversold momentum line and a strong bullish posture. You would expect that will bounce out of that. Now the near-term line is not below 50, so it might take a day for that to happen. So if we do get some weakness again tomorrow, kind of watch the 140 area to see if we dip back below 23%. I don't believe that we will dip below that, but that's something we can get to if it takes another day of weakness or softness for the blue line here to get below 50 before bouncing back up again. Taking a look at gold, you can see the weakness that it has been so bullish. Now it's finally kind of, it's gotten back above that 23% line. We had retraced down, gotten below the 23, gotten below the 38 a little bit, double bottom, got back up above it, and now we're back above the 23% line before today's breakdown. Again, strong bullish posture, oversold momentum line, near-term line now down below 50. We'll see if we bounce off of this tomorrow. Very important level. Again, it can rise with the dollar rising, but that would be a safety mode. That would be a strong that would be a correlation with safety trade. If I remove all this and then bring up the correlation here, and then let's bring the correlation over here to the ETF UUP, which tracks the dollar index on a bullish chart. Let's go 63 days, so a quarterly correlation. And then you can see they're negative, right? Typically it is negative, but if I were to kind of give you some perspective on how often it's negative, so there's a negative correlation, you can see there are times where it's not negative, where it can be positive. So back here into September, going into October, it was starting to get positive, and that was when we had a little bit of strength in the dollar and gold going into the end of the year there. So when we are weaker, you can see that relative strength go up. You look at the fourth quarter 2018, it went up to really strong levels when they both rallied there during that soft period. So that there can be positive correlations in the bullish direction when there is softness. Mostly it's a negative correlation. As you can see, mostly we spend time down in the lower half of the chart, but there are brief periods, and again, it happens during the weak periods. If I were to go back even further, you can see over here some of the weak periods here where we can really get bullish on both of these, on the dollar and gold going to the upside. The most famous one being right here in 2008 going into 2009, when they were both rallying pretty hard there with this jump in positive correlation before setting the low point overall in risk appetite. And you can see it again in 2010, and you can see a positive correlation going into 2011 by the time we got to right there with the credit downgrade. So those things, they can move together, they can move to the upside together, but it's generally because it's a broader risk off move. So we'll see how that plays out here going forward. If we take a look at the sector rotation, you can see, remember, the Qs were the biggest winners today, so you can probably guess the big winners from just today alone from a sector standpoint. Let's pull up the 10-minute chart. And you can see technology, XLC, and real estate still doing really well too. XLY kind of lagging behind a little bit, and of course the sectors that have been so strong over the past few months, really, again, since that September 2nd peak. So during the pullback on this last intermediate drop, and then coming off of that pullback, this would be, sorry. So after the peak, during the intermediate decline, and then coming out of the intermediate decline, you can see how these areas have been so bullish, and they're starting to lag behind, and you're starting to get some relative strength in XLK, XLY, and XLC. If you take a look at this chart here, where is it? Here it is. This is the QQQ relative to IWM. You can see QQQ is starting to turn up a little bit. And has been the case for just a couple of days here. Looks like we hit that low point there on June. What day was that? That would be June the 8th. So if you take a look over here, and we just take a look from June, let's go June the 9th going forward, then look at the softness in these areas and look at the strength in XLK, really kicking butt up there. XLC doing okay, XLU being really strong with XLV. So, again, quasi, safe risk off trade kind of mixed in between the risk on the cyclical areas, whereas these areas which have been so bullish are giving back some of their gains. So, don't be surprised if that continues to be the case, and if a lot of these lines end up being just below zero, if we do get kind of any broader weakness. They would still beat these areas, these small cap areas, but they might not be, they'll go up on a relative basis. They might not go up on an absolute basis. Let's take a look at the 12 grid for the different charts. This is an interesting pattern showing up here too. Again, dark pink shading on XLI as we're finally getting below 50 there. XLB is light pink shading the yellow line. XLF, light pink shading the yellow line. So they have the opportunity to either turn around or not. Look at XLK. Big bullish move here recently. XLY is giving us a bearish pattern, a light green shading and a yellow line. XLC recently giving us a cluster, again, with a very mature rally. If you take a look, at XLC here, if I were to pull up this chart and pull up the market forecast to show you the cluster. So there's the cluster. So there's the run it's been on since that Halloween low point. We talk about a lot of different factors that help confirm an intermediate pullback, one of them being a red arrow. And so we haven't had one since that Halloween low point. So we've had little dips, but we haven't had a pullback yet. So when you, with that perspective in mind, when you say, okay, we've gone this long without an exhale, and now we finally get an overbought cluster. See, these clusters were kind of, they were relatively mature markets then, but not quite the same because we haven't been so bullish for so long. And if you take a look at the DMI2, XLC here, you can see that we've just, look at the ADX being so far below for so long. Let me show you on the weekly chart here. Let's go weekly. There's our parabolic move, and you can see our parabolic move is starting to come to a close on a long-term basis, coming off that Halloween low point, and then especially coming off COVID. And again, with a cluster now on the daily chart, so long into a very mature run. So this is a sign to keep an eye on, to see whether or not we might be kind of running out of steam, so to speak, on a sector basis. This being one of those cyclical sectors, Facebook, Google, a lot of the Netflix of the world, those types of stocks would be fitting into this particular category. One stock that's in that kind of materials area that's been showing some softness lately is FCX. If you take a look at it, its intermediate line has fallen below 50. It's fallen below 40 now, so it's really kind of crossed over into bearish territory here. If you take a look at the 2-line version of its 3 green arrow chart, you obviously see we have 3 red arrows. The MACD and stochastics are really dropping pretty sharply here. The 8 and the 17-day moving averages are diverging now away from the 30-day moving average. You can see the MACD is diverging away from 0 to the downside, with a new histogram going in the negative direction. If you take a look at like the DMI and the DMI chart here, you can see that the positive indicator has dipped below 20 for the first time in a while. The negative indicator has jumped up above 25 after being so bearish for so long. You take a look at the RSI and the CCI. You can see that we're breaking below 50 on the RSI or CCI, RSI, excuse me. The CCI is breaking below negative 100 for the first time in a while. From an Ichimoku standpoint, this is what it looks like. We had been bullish. We're not bullish anymore. We've been below the blue and green lines. For the green line actually has crossed below the blue line there. From a Bollinger Band perspective, you can see that we are in the lower quartile of the chart. We're kind of breaking below a volume node. We're starting to push that lower line down to the downside. So a lot of bearish signs, but not a whole lot of directional, not very strongly bearish, and not a big volume gap in terms of how far we can go down before we meet up with some pretty significant support. But as you can see, we got a pretty decent resistance above us right now. So it gives us an opportunity to do a bear call spread on FCX. We'll go out to July. As you can see, I sold the 41 strike, bought the 43 position sizing around a normal position size because I don't have to worry about earnings announcement. So we'll get rid of that old one. So there's a full position size with almost $400 of reward. To go with that. That break even is what that blue line is right there. If you take a look at the chart here on the short-term basis, here's FCX, there's where that break even is. So there's our point of control on the short-term chart. So it's going to act as a resistance there. The midpoint of the 4-week range is there too. So after breaking down today, we'd have to nullify that breakdown and then break above some pretty strong resistance on the short-term level at least, for us to start sniffing that break even and start looking at getting out potentially. Like, again, if I'm willing to make 380, if I'm trying to make 385, I'm willing to lose 385. As of right now, that's up to 43.5, so that would be getting up to here before I get out as of today. So that would be a pretty significant change and turnaround that we wouldn't necessarily just be getting stopped out on a whim, if that makes sense. All right, so that wraps us up for today. You've heard from me. Now I want to hear from you. Use that link popping out in the top right corner of your screen that takes you to our Market Outlook forums. Open up any new threads there with any questions or comments you have. Or reply to anybody else's threads, and let's keep this conversation going in between the videos. As always, thank you very much for watching. Remember to subscribe to our YouTube channel, hit that thumbs up icon, as well as like us on Twitter and Facebook, and comment on the video. Have a great rest of your Monday night, everybody, and we'll see you all next time.